Welcome back to Over the Horizon, a Bitcoin podcast. Today, I'm happy to be joined by James Check, co-founder and on-chain analyst at Check On Chain. James, how's it going?
G'day, mate. It's good to be here.
Yeah, absolutely. We're on the different sides of the world. It's 7 p.m. for me, 11 a.m. for you. So I appreciate you making the time, especially with a newborn. Congratulations.
Thank you very much. Yeah, he's kept me plenty busy and it's taking plenty of my attention, but, Bitcoin is still there in the background, although you could walk away for 6 months and it'd be the same price. So, Chopsolidation as we go.
Exactly. It pairs very, it's a good time to have a baby, right? Because Bitcoin is doing absolutely nothing. You could walk away and not miss much. So I guess let's talk about that. Actually, before we get started, news broke today. Donald Trump pardoned Binance founder CZ. What do you make of that? It's totally irrelevant to the rest of the discussion, but the news broke today. It's kind of relevant. I don't know if you're just hearing of it. I think you may have heard of it yesterday.
Yeah, no, I
Any
saw
thoughts
it.
on that?
Saw it on the tape this morning. Man, look, it's one of those things. You got to give credit to CZ. That dude has I can't think of anyone who's been more just objectively successful in the crypto boom. Like the dude just won on every front. It's quite remarkable. He went to prison. He's been charged. He's been all these things, and then here he is, just pardons and the fastest billionaire that we've seen in a long time
Yep.
because Binance just went through the roof. I mean, he built a product that people just want, and you got to give it to him. And I think a lot of people in the Bitcoin space probably miss it, but Binance is actually a huge entity in in the third world, right? Where you just have a lot of people they use as payment processors, and Tether flows in and out, and Tether's become money elsewhere in the world, actually just money in the world. It's kind of remarkable the journey that he's been on. So you got to give credit. The dude's a real winner here.
No, 100%. Yeah, I think a lot of it's tough because sometimes the X algorithm, what you like, it'll keep showing you that same thing. And so it's tough to get different opinions, but you're absolutely right. You got credit where it's
Just an
due.
objective
Hats
winner.
off to the guy. And it's also quite funny. He kept doing that 4 thing, holding up the number 4. He was only in prison for 4 months as well. And then all of this that has happened. So hats off to him. Let's dig deep. Let's dive into the on-chain side of things. Last episode, I spoke with Alex Thorne, who kind of explained why Bitcoin has done what it has done. We called it the wall of worry, the cloud of uncertainty, whatever you want to call it. But the macro backdrop hasn't been very supportive of Bitcoin. Other risk assets have done pretty well this year. Bitcoin, since Trump's inauguration, you can measure it from, or since January 1st, it's up a little bit less than 10%, I believe. And so not a great year for Bitcoin. The consolidation, you coined the term Chopsolidation, has been arguably even longer this year than it was last year. I think last year, we were looking at from April to September, or maybe March to September. This year, it extended from, you could call it May, which was the first time we went above 110K, but you could even say that it kind of began all the way back in January.
Kind of a whole year.
Yeah. So what's going on here with Bitcoin?
Yeah, Chopsolidation has paid far more dividends than I anticipated, honestly, because I started talking about it obviously in the 2024 Chop. And just to give people a bit of background on where that term came from, there's a technical indicator that I use called the choppiness index. It's one of those kind of obscure things, but I find it quite useful. It was originally developed for commodities. And it basically, we know that markets can't trend forever. They don't go up in a straight line. They don't go down in a straight line. So it's a really cool tool it's directionless. Doesn't tell you which way the market wants to go. There's no strength or anything in it. But what it really shows you is, have we trended really hard in one direction on the monthly time frame? What about the weekly time frame? What about the daily time frame? And in theory, you could go down to the 1 second if you want. And the idea is that when you've gone in one direction for a long time really quickly, you need an approximately equal time to chill out and go sideways, just consolidate the gains. So, and that's in both bulls and bears. So essentially the choppiness index in March of 24, we had hit this run off the FTX bottom, and we just run out of energy. We'd run out of monthly energy. And my call was if we've gone up for 10 months, we probably need about 6 to whatever months. It turned out to be about 8 months of sideways, and that was enough to re-gas the tank. So the way I think about it's like a gas tank. Now, where we are right now, we kind of exploded in November, December, and we've been going more or less sideways ever since. Now, the choppiness index on the weekly and the monthly time frame are as full tank of gas as you can possibly get. So my read on this, the market has gone absolutely nowhere for so long. The next move, and I don't know which way it's going to go, right? If it goes to the upside or the downside, whichever way it goes, it's going to be a serious move. So I've been writing for my subscribers recently, trying to unpick and say, do we think it's going up? Do we think it's going down? Because the choppiness index doesn't tell us that. It just tells us we are ready to move. And from the, like, I can go through the bear case and the bull case. Like the bull case, really, if we get back above like 114, that's the short-term cost basis. We're in this world where, like, once you get 3 touches on a support or a resistance level, usually you crack it. And the fact that we come back up to that short-term cost basis, this will be the 3rd time since August that the market's gone, no, I want to go higher. And I think then it wants to go on a proper run. Now, the flip side of that equation, if we go below 100K, it's a psychological level. There's a whole bunch of on-chain price models there. And the most important level, I think, in Bitcoin right now is 95. 95, no matter which way I slice it, there's a stack of futures liquidations down there. There's a put wall down there on the options market. If we go to 95, 62% of all the dollars ever invested. So if we talk about the realized cap, 62% of the realized cap has a cost basis above 95K. Imagine all those people suddenly being underwater. Sentiment will just go to the absolute gutter. And I think then we start heading down into the 80K region. So whatever direction this market wants to resolve in, I think it's going to be powerful. And I think really everyone should be preparing for both scenarios, because it's really tough to call right now. I mean, the 4-year cycle is kind of dying with a whimper of just like nothingness. And it's a fascinating way for it to go out. But in hindsight, it's probably the only way it could have gone out, is just like not doing whatever unexpected, which is going nowhere.
Absolutely. Yeah, no, let's talk the 4-year cycle. And then I want to get into the bull and bear case, because the macro backdrop has a lot to do with it. You know, the 4-year cycle, there are 2 different camps. One is that it was a self-fulfilling prophecy. You know, people thought it was going to happen, so it did happen. And that was helped by Bitcoin's actual monetary properties. It just so happened that a year after the halving, Bitcoin tended to have these blow-off tops. What we're seeing now is Bitcoin has not had a blow-off top at all. It is each new all-time high that we've seen this year in this cycle, even when we first crested 110, I think we went to 110 or 112, and then we came back under, and then it was 116 or 118, and then we came back down, and then it was 124, 121, and then shortly after that, like within a day or within a couple of hours, 124, and then we came, you know, all the way back down, and then we went up to 126, and so it's been extremely incremental. Whereas in prior cycles, and even, you know, I was saying this because I was getting bored. I tweeted out at one point, I said, this is the phase in Bitcoin cycle, early October, when we had already lapped all of September's gains in 2 days. I said, this is the part of the Bitcoin cycle where you see a new all-time high every week. But that didn't happen. So we haven't had that typical blow-off top. And so you talk about the 4-year cycle dying with a whimper. What are your thoughts on that? Is it just narrative, or has it always just been the macro backdrop, which just so happens to align with Bitcoin's halving, and it's just spurious and coincidental?
Yeah, I think there's a lot of components here, right? And in the early days of Bitcoin, the halving would have had a much bigger impact.
Mm-hmm.
In the latter days of Bitcoin, like, I think the 2017 top was very important, probably underappreciated. It was when Bitcoin became a household name. And if I just kind of break up the actual understanding and adoption process of Bitcoin, so think about like a human regime. Up to 2017, everyone's like, wow, what is this new thing? How strange. From 2018 through to 2022, we're betting on how strange that thing is with leverage, and, you know, stable coins come to life, and suddenly everyone's like, altcoins are going to flip Bitcoin. There's narratives flying everywhere. Then we had the everything bubble in 2021 and the bear market that just like flushed everything. But what else got flushed? Bonds. Suddenly we've gone from that like 40, 50-year bond bull market to a, hey guys, maybe we just set the bottom in interest rates. Regime shift at a macro level. So from 2022 onwards, the end of it, so let's say 23 onwards, every Bitcoin pattern that I look at, whether it's MVRVs, whether it's Mayer multiples, whatever you want, mean reversion oscillators, something changed very meaningfully after the 22 bear market. It just trades in a very different way. We've gone from 350 billion market cap to 2.5 billion, and we've barely had a 32% pullback. In my bear case scenario, like we can talk about why I think 80K is like an important level. That's a 36% pullback. So like, are we now saying that a bear market is a 36% pullback? That's going to break everyone's head as well. So I think there's a lot of components, but 2017 and really 2018, 22, the world is responding to Bitcoin as a new thing. Now, Bitcoin is beyond, like, Larry Fink is shilling this thing. Like, we're no longer early. And from that perspective, Bitcoin is now going to be much more in tune with the rest of the world. So rather than people buying Bitcoin because it's new, unique, and interesting, they kind of buy Bitcoin to solve a particular problem. Like I buy Bitcoin because I can see this debt pile, I can see the macro uncertainty, and I know that the debasement trade is coming. So at the end of the day, I actually own Bitcoin for a very specific reason, and that is because I think it solves a real problem for me. So the way I'm actually buying Bitcoin because of the rest of the world, not because of Bitcoin, if that makes sense. And I think there's a lot of people in that camp.
I do believe so as well. I think Bitcoin at $2.5 trillion, it's abundantly clear to me between, not just the decrease in volatility, and I'll pull this chart up here. This is from your latest report. I'll polish this up in post, but this is from the Bitcoin Checkpoint, your latest report with Unchained. I'd encourage everybody to go check that out. It'll be linked in the description. And this showcases what you were just talking about. The maximum drawdowns during this bull market have been 32%. That's the maximum drawdown, which is pretty insane. Particularly when you consider the bull markets of yore that you also put on this chart. Do you have any commentary now that I have this in front of you?
Yeah, I mean, like first and foremost, this is like the shallowest drawdown profile that we've had in any bull.
Mhm.
And by the way, those 32% lasted like 4 hours. Like they were very, very brief wicks. They didn't last a long time. So this cycle has been very different. And it's quite fascinating because sentiment has been very different this cycle. I think a lot of expectations, people kind of thought Bitcoin was a bit like an ATM and they deserve to get rewarded for their waiting. And it's rewarded them, but not as much as they would have hoped for. Expectations have been kind of dashed in that regard, but also we haven't had any serious drawdowns. And I've been using this good example here. Bitcoiners who are used to the high octane volatility world, sad as anything. Bitcoin Twitter looks like a bear market. And yet my old man, so he got in 2020, he rode the up, he rode the down in 22. He actually messaged me the other day and goes, hey, I'm thinking about buying some more. So like my old man doesn't want the volatility. He told me all about how shitty 2022 was. He wouldn't let up about it. He was like, when is this thing going to go up? He's, hated it. And then now he's asking me to buy more at, 126K. So it's interesting that like there's this dichotomy. And I think about, well, who does my old man represent in the rest of the world? There's a lot of people who are getting off zero. They're that first entity who's stepping in to actually buy Bitcoin, put 1% in my portfolio. If it goes down 30%, sure, I don't like that, but it's not 100% of my portfolio. So I think a lot of these guys, like there's just a different pool of investors and there's like this passive bid that just keeps coming in. I mean, the ETFs in this report, we titled the chapter, The Extraordinary ETFs, because they have been extraordinary. They just keep buying. And we look in the on-chain world at a lot of metrics like SOPR and MVRV. And what we generally want to see is most of the time in a bull market, it's positive. People are happy, profits are there, people are taking profit. You want that to happen. And then you get short, sharp events where people get flushed out. Top buyers get flushed out. That's the dip. Let's go. The ETFs are starting to trade much the same way. Most of the time they're inflows. The average inflow week, and there's many more of them, the average inflow week is like 3 times larger than the average outflow week. And outflows last for like 4 days. And then it's back to, you get 500 million of outflow. And then next thing you know, you got 2, 3, 4 days in a row of $1.5–2 billion of inflow. So there's this like short, sharp panic selling the bottom, and then the demand just comes roaring back in. So it's a really fascinating structure. And like we can also talk about the sell side pressure, which is why we haven't gone anywhere despite that buy side. There's all these competing forces that I think just makes this market cycle, for me as an analyst, so much very, very interesting stuff.
Fantastic. Let's talk about the sell side then. I think that per your comment about sentiment, I actually wanted to say something here. I think, and I'm curious your thoughts on this, but for me, as far as the old guard is concerned, what you call these high octane Bitcoin investors, maximum pain for that cohort of people, I don't think it's not down, right?
No.
I believe it's sideways because we're near all-time highs. I mean, we're within spitting distance of it. I don't know what my block clock says behind me, but I think we're doing pretty well today.
It's like 12% or something, 12, 13%.
We're 12 or 13% move off of all-time highs. Sentiment is in the gutter. It feels like this is the middle of a bear market and Bitcoin has drawn down 50%. So, ultimately, I think that is the key distinction here. The new guard really doesn't care. Like my mother, for example. My mother owns a great deal of Bitcoin. I was able to orange pill her successfully. She's a last cycle entrant. She doesn't care. She hears me making videos and talking about Bitcoin, and she asks me what it's doing, and I say it's down substantially. And she doesn't care all that much. I think that, and this is, for me, I think, from a volatility perspective, Bitcoin's 90-day and 30-day realized volatility, both near or at record lows.
Hmm.
It's just a fundamentally different asset now. So in that environment, sorry for going on a tangent there, but the sell side, I want to ask you about that. Is it psychological, a psychological level where people are taking profits, right? Is it a key profit taking level? Do we just not have the volume? What are the components behind the sell side here that's kind of preventing us from moving higher?
Yeah, so there's three things I think are the most important, like structural things this cycle. First of all, the ETFs. Very clearly, major buy side. I guess you could like append to that the treasury companies, because I view like the ETFs are very much like a passive, always on bid. And then you had these like bursts of aggressive buying from the treasury companies, but they're effectively the same thing. Significant buyers of a new form. The other one is the IBIT options going live. Started in November. That's another massive change to market structure. They're now bigger than Deribit, so that's another key thing. And the third one is sell side by existing holders. Now, going back to the original question about like the 4-year cycle, the halving, miners get 450 coins a day, 450. On any particular day, and I checked it yesterday. Yesterday, we talk about revived supply. These are coins that are 6 months old that have been spent back into the market. 22,000 yesterday alone. 22,000 coins. And this has been in an uptrend for a long time. So at the March 2024, the ETF peak, we had about $50 billion a month of profit taking, 50 billion a month. At the November, December, that got up to 100 billion. And we peaked at about 80 billion when we hit that first 124K all-time high. And right now it's sitting at like 40 billion a month. These are tremendous numbers. And since April, we've seen a structural just uptrend. Revived supply keeps going higher. Now, I still personally don't have a satisfactory answer for what's going on. All I know is that there is why I like revived supply is there's a bit of proof of work there. You have to have literally bought the coin and held it for 6 months. You can't like fake this by saying, oh, I'm going to just like pretend that I held this for a long time. No, you have to have actually acquired the Bitcoin. The UTXO must be 6 months or more old. And we're seeing this across all age bands from 1 year, 2 year, 3 year, 5 year, all of them. They're all in a structural uptrend. To give people a bit of a sense of scale here, the average age of a coin that's spent typically is about 30 days because there's a lot of young coins that get respent many times. Right now, the average age of coins being spent, and it's been in a linear uptrend this whole cycle, is 100 days. So this is like abnormal structural selling. And, when does this selling peak the most? When the price is going not up. And I see so many people talking about price suppression and market manipulation and all this kind of stuff. And like, yes, in a small part, but like also just look at the selling, guys. There's just tons of it. So that I think is a really interesting angle. And it's, in my opinion, it must be like that 10K level. There's a few elements here. And again, I really don't think this is a comprehensive overview, but first things first, regulatory environment is much better. We saw some dude, a Galaxy executed this, 80,000 Bitcoin. He probably has never had the imagine just pulling $10 billion out and saying, I got it from Bitcoin. You would have had your bank account shut down in the last administration. Like, good luck with that. So I think now there's like a regulatory cover. There's also ETFs, treasury companies. There's enough buy side to absorb 80,000 Bitcoin, right? And by the way, this is the other side of the story. Think about all that sell side and the price is going sideways, not down 75, not down 80. The last time we saw 80,000 Bitcoin sold in a clip was Luna, and we went from 45K down to 15. So, a slightly different demand profile to these days,
Right.
at a higher price, no less. So I think that there's a regulatory cover. There's the demand for these big guys to actually exit in the first place. And it's not all these like 10,000, 80,000 coin guys. There's a lot of just like people who've been in a momentum trade. They thought Bitcoin was going to rip. It's gone sideways for the whole year. Like, I'll rotate. I'll go to NVIDIA. I'll go to quantum stocks. I'll move my money around. Like, there's a lot of people who are going to do this. So look, I think all of those elements are a factor. I also think 100K. 100K was just like the dream math number. For these guys who've been around for years and years and years, they finally hit it.
Oh yeah, all the way back in 2021. I'm not sure if you remember, but the main tagline was
100K
by conference day.
Yeah.
100K. Didn't happen. 4 years on, it finally did happen. Huge psychological. So there is a great deal of selling here. We may not be able to pinpoint exactly why, but we can make these educated guesses. But the bigger story here, and I think that's what you're getting at, is that Bitcoin has maintained stability.
Yes.
It is flat. right? It's
Yes.
chopping around within a range, but despite all of this immense selling for any variety of reasons that we can observe on chain, we can observe in the order books, Bitcoin is holding steady. And that requires an immensely larger pile of capital than it did in prior cycles when Bitcoin didn't nearly have this demand profile. So to me, that's indicative of it being a fully fledged global macro asset
Yes.
rather than being more of a fringe speculative vehicle of days past.
Totally. And this is where I come to like the bull and the bear case, because and I use these two personas in my writing to help people of different, there's some people are retirees, some people are professional money managers, they're more sensitive to price. And then there's people like me who are just hodlers, right? I don't, if it goes down 30%, it goes down 30%. I keep buying. So there's certain parts of my audience that I want to just like draw the dots and then they can connect their own lines depending on who they are. Now, check the analyst, his job is to be very objective and just call a spade. And he looks at this environment and goes, guys, look, it's to pretend that this is bullish, like saying that selling is bullish. This is a meme in the crypto world, right? Bullish selling. It kind of is, but like at the same time, like guys, there's a lot of sell side here and the price is still looking a bit heavy after that liquidation level. So just be aware that it could be a kind of scary point moving forward. Check the hodler then steps in and goes, okay, that's cool, but also, that's a lot of demand. Like, that's a lot of demand. 62% of all the wealth up here above 95K. Check the analyst goes, don't go below 95 because that's scary as. Check the hodler goes, yeah, but we're not at 95 yet. So, like, let's keep that in mind. And then I mentioned the IBIT options before. Here's a fun idea. Right now, in the October contract, so like the reason why October is important is like in terms of the 4-year cycle, whether we measure from the cycle high or from the cycle low, we are exactly at the point that the last 2 cycles have ended, have peaked. And I believe there's a lot of people who are going, cycle sucks, Bitcoin sucks. I had one guy explain to me, he said it was a golf cart for 401ks. That's how he described the Bitcoin price action, which I think is pretty funny. Anyway,
Yeah.
so that's kind of like, everyone's like, what a crappy cycle, I'm walking away. And there's a lot of other people, the amount of call options that have been sold near the all-time high is massive, like tens of billions of dollars worth of call open interest. And check the hodler goes, well, you're telling me that in October, November, there's only 7% of all call options are in the money, only 7%. Generally speaking, when you look at the options order book, the max pain price, which is where the majority of options expire worthless, is usually very close to where the price is. They're like a magnet to each other. Well, right now, max pain price is 120. So check the hodler looks at this setup and goes, so you're telling me we haven't gone lower. We haven't got down to that scary 95 level. I get it. If we go down there, it's scary, but wouldn't it be funny if all those people sold the 4-year cycle and sold a bunch of call options and then gave up all the upside from the move that comes? Wouldn't that be a kind of funny, like max pain scenario? And like TXMC had a great tweet the other day. And he said, max pain is never to the upside. And 99.9% of the time, I agree with him. Max pain for everyone who says, oh, max pain's to the upside, they're usually long. And they just think like everyone else is going to be in pain.
No.
But what if all those guys actually are so bearish that they've sold covered calls, like just collect some options income, and then they lose the whole upside of the actual bull? That is actually kind of a max pain scenario. And check the hodlers here for it.
Fantastic. Very well said. I mean, ultimately, I think another component of this is that the 4-year cycle has been so expected. And very few people are saying, that even though you and I say, okay, Bitcoin may go higher, it may go lower, the 4-year cycle largely gone and buried. Bitcoin supply schedule changing had a much more acute impact when we were going from 50 coins to 25 coins per block and 25 to 12 and a half. Now that it's getting so marginal, it doesn't have that much of a shock. And so it's mostly macro conditions. The macro setup looks good, but the prevailing narrative is still that the 4-year cycle is here to stay. I believe. I think at least that's what I'm reading on the street. And so I believe part of me wants to think that because it's so expected, it may be the exact thing that does not happen whatsoever. I mean, I pull everything back. I try to zoom out to 30,000 feet. I see a Fed that's now easing monetary policy, going from restrictive to supportive by not running down its balance sheet anymore. I see a Fed that is not only set to induct a new Fed chair next year, but is already on the path to cutting rates by 125 basis points, while inflation is already not at their target, with scarce bank reserves, just like we had in early September of 2019. And so from the Bitcoin side of things and how people are positioned because they're expecting largely this blow off top, and the macro side of things where we now have not extreme easing, that would require QE, but largely the closest thing you can get to a monetary bazooka as far as easy monetary policy goes. Those two things together, I have a hard time in my mind trying to think of a scenario apart from the economy cratering suddenly and then the Fed being forced to respond in kind where Bitcoin doesn't do really well over the next couple of
Yes.
months. Perhaps you can add some color there, balance me out, and give the bear case to that.
No, honestly. So I think the bear case is very much just there's just too much selling and we just crack through some key levels. And then next thing you know, you're at 80K. And the reason I think 80K is an important level, and it's a zone, right? I don't know if it's going to hit exactly 80, but there's a few things down there that make sense. The ETF cost base is about 83K. There's a model called the true market mean, which in my opinion is a better version of the realized price. It reflects the average cost basis of active investors, people who are actually in this cycle. That's at 81K. Sailors cost basis at 74K. The 2024 top of the chop was 74K. There's just like a lot of areas there. I'm like, the headlines will be so dire. Sailor about to be liquidated. Every ETF investor gets wrecked. To me as a hodler, I'm like, give me that price all day, every day, right? I'm stepping in front of that train. So that's like a zone of interest that I think would be the tariff tantrum. We bottomed to like 85. So that's like a zone of interest. And then I look at that and go, okay, sure, we could go lower than that, but it's just not my base case. So if my base case is that the bear market extent is like 80K, that's a 36% off the all-time high. That's a bear market now. I'm like risk reward is massive to the upside. Sure, I'll keep buying all the way down because to me, like the trade after the trade, and there's an idea of him playing around with, like we saw gold go on that tremendous run, probably hit a blow off top. It's got to chop around, I'd say, for 6-12 months. Like when gold moves, it's important information because it rarely moves, let alone adding 12 trillion in 10 months. So if gold can go up 12 trillion, it's telling you that something is coming. Something is coming down the pipe, and we've got to be very, very careful that people are selling Bitcoin right now. It's like, guys, if gold can add 12 trillion, can Bitcoin add 1 trillion and go to 150? Yeah, probably. Like that's well within bounds and well within reason. So in my view, if even a fraction of this money starts to rotate around, Bitcoin, I think, is a much more sensitive liquidity index. So I would say that, like in the local term, sure, liquidity conditions aren't ripping and booming. There's no bazookas going off. But if we get any kind of downside in the economy or any other form, the trade after the trade is the bazooka shows up and Bitcoin goes massively higher. So I just look at this like gold's telling us where we're going and Bitcoin might tell us it's a rocky road to get there, but we're going to head in the same direction. So check the holder, very happy to be accumulating. The cheaper it goes, the better the risk reward is.
Me as well. I mean, I was one of the folks, and I told Joe Carlasari this a couple of days ago. I was one of the folks who was propagating the Bitcoin and global M2 chart, largely because I found it extremely interesting. I put it together in my terminal. I'm like, wow, whatever Bloomberg uses to aggregate global money supply, and I think we had talked about this in DMs at one point. I'm like, wow, it's actually following Bitcoin quite nicely. Of course, that has since broken. It proved to be spurious. But the new chart on the block is Bitcoin lagging gold, right?
Of course.
But I do agree with you that gold kind of sniffs the future, right? It senses the future. It's a much larger, more liquid asset, more widely distributed, larger market value. But Bitcoin is far more sensitive, 24/7 liquidity, trading 365 days a year, 100% uptime. And we saw the first thing to be sold, the thing that lost the most market value 2 Fridays ago when Trump initially announced this additional 100% tariff. It wasn't gold futures that were still open. It wasn't equities futures that were still open. It was Bitcoin, right? It shed an insane amount of value. And so, I tend to think that moving in the other direction, per your comments about a capital rotation, these are fun thought experiments for me more than anything. Obviously, Bitcoin on a long time horizon is not correlated to gold. One day it could be, but what gold is sniffing could very well be the Fed's response to what may be coming, and those in the know are purchasing gold as a result of it. It could be the resolution to these geopolitical tensions. But either way, whatever happens, whatever gold is sensing, Bitcoin will be far more sensitive to it. It would only take a 2% rotation of the capital that has flowed into gold over the last year to send Bitcoin to $165,000. And that's just the capital that has flown in year to date into gold. A rotation of 2% would send it to 165K. So that's just a thought experiment. It's fun to think about, but the reality of the situation is that gold never moves. It's been a $20 trillion rock for a decade, and suddenly it's a $30 trillion rock. That's telling you something. And I think
Totally.
it's just you and I both agree here. I think that it's telling us something is going to happen. We don't know exactly what. We can make guesses, but whatever it is over a long enough time horizon, whether it's a month from now or 5 months from now, whatever happens in the interim, Bitcoin's gonna explode higher.
Yeah, and that's my view. I really think that Bitcoin is an asset that you want to be owning in this period in time. Has any of this like sideways? And this is the thing. I think a lot of people. It was so funny watching all the Bitcoiners go like, "Oh man, what if Bitcoin loses to gold?" I'm like, guys, gold has been going up since August. Since August, it's been like 2 months. You're telling me that 2 months of gold going up after decades of not going up is going to break your Bitcoin thesis? You might have had a problem with your Bitcoin thesis. Go back to the drawing board, guys. It's going to be fine. So yeah, no question. This year specifically has disappointed a lot of people, but you got to just like zoom out and look at this whole thing in a broad picture. It's why that sell side, I think it's such an interesting dichotomy. There's so much of it. Billions and billions of dollars every single day. The price didn't go down. The last time we saw this kind of sell side, we were in a horrific bear market that was just endless. And here we are, sideways. Well, sideways, not fun, but also, not down significantly. So, I think it's one of those things of like, if you zoom out and take a big picture view, it kind of is bullish selling.
Yeah, exactly. Bullish selling. It used to be a meme, but now it's reality because we can stitch the narrative together on our own.
Yes.
I have a couple more things to ask. I don't know if you've seen this stat. Will Clementi posted it, but I believe it was Walter Rebello. I hope I didn't pronounce his name incorrectly, but someone had posted and they asked the question, after open interest wipeouts of say like 75% or more, like we saw on 2 Fridays ago, what's the historical tendency for Bitcoin, right? Does it go up more of the time, go down more of the time? And within 90 days, Bitcoin has a 75% hit rate of going up after there's this massive wipeout in open interest, like we saw last 2 Fridays ago. So for me, like, funding has been reset. I think 2025 can be described as a year not just of Chopsolidation, but of like expectations being reset, coins shuffling around, positioning being reset. If last summer was a preview, last summer's Chopsolidation, I think Bitcoin has an even more firmer base than it did last summer. More coins distributed from people who wanted to sell above $100,000. Market structure has been reset completely in perpetual futures and in the options market. And we're in a really, really great spot from a market structure perspective, just as Bitcoin's, these macro headwinds that have prevented Bitcoin from moving higher are turning into tailwinds. I may sound like a broken record, but I don't know if you've done work taking a look at these leverage wipeouts and generally what happens to Bitcoin afterward, but you tend to agree, or just in your historical analysis, that when we see wipeouts like this, generally the direction afterward is not downside?
Yeah, so I think the best way to think about these leverage wipeouts, so from memory, we went from like 94 billion down to like 64, I think, is the total
30%,
OI
yeah,
wipeout.
roughly.
Yeah, so it's about 26% or something like that. Very meaningful. If we go back to 2021, these are the last times that we had 2 such events. So my view is that, like, it depends how you want to measure this thing, but May 2021 was a 52% decline, I think, in open interest, and the price went down 50 odd percent. That was and in my opinion, that killed the bull. That was the final shot. It crawled up to a new all-time high, and I'm on the record years ago saying that second all-time high in 2021 in October, November was actually an all-time high in a bear market, because no matter which way I sliced the data, sentiment was completely destroyed. The second one was in December. As we came off that second all-time high, we had another leverage wipeout, about 32% open interest, and that precipitated the 2022 bear market. So I don't know where those stats come from, because they're the 2 big ones that kind of stand out to me, and both of those were horrible. So I think in that regard, it's probably worth being aware that the last 2 times we had those, we kind of started a bear market. So that's, again, goes in and check the analyst camp of saying like, it's not all well. However, at the same time, we've flushed it like a forest fire. We cleared out every speculative long. You're right. Funding rates have gone to basically zero. We have no more leverage in the system. Sorry, that's not the correct statement. We still have 64 of futures and options, by the way. So for all of our time in this market, futures have been the dominant derivative. They are now options are now double double the futures open interest. So it's just exploded with these high bid options. It's very, very clear that they've become the killer product for Wall Street, no question. So that's the other thing to be aware of, is that market structure has changed. It's actually no longer driven that much by futures. There's been a forest fire. We have got rid of all those speculators, and we aren't really seeing them levering back up, which is good. So the odds of another deleveraging event are much lower. There are a lot of stop losses and things down below like 100K, that zones, which again, I don't really want to visit that area because I think we drop much lower after that. Although I kind of do, because then you get to buy cheap corn. But until we get down to that zone, I don't think futures play a big role. Options are going to be far more significant. And there's a huge put wall also at about 100K. Okay. So there's a lot of people who've written put options that kind of don't want to see the price go down there either, because then they're on the hook for those sold put options.
Very well said. Thank you for the color there. I want to ask you now, kind of shift gears a little bit to Bitcoin treasury companies. You've obviously been vocal about them on the timeline. What's your take on them? In this current market, is there a world where they recover? Is there a world where they're in demand again? Or is strategy just genuinely the only player in town forever?
Yeah, so I first properly went down this rabbit hole in November when strategy was, I think it had almost at or maybe just past the all-time high. And I wrote a piece called The Infinite Money Glitch. And this is where I just basically went through and tried to, that was the prevailing narrative, that he's got an infinite money glitch. So I went through and just tried to, from first principles, think through what they're doing and what I thought the long-term viability of this strategy was. Now, my general framework, I pulled a couple of key insights out of that original study. First one is I felt like gravity was towards 1 for MNAVs. The premium wants to go towards 1. Now, the company can do things to push the premium higher, right? Some people call it accretive dilution. Whatever the company does, capturing volatility, selling bonds, selling preferreds, whatever it is, they have to do something to make investors want there to be a premium in the stock. Now, the company, as they sell stock, which has been the predominant way that these companies have raised money, by selling equity at a premium, that works great when you're at a premium. But the company is literally doing the exact thing. This is what Jim Chanos got a lot of stick for it, but he was right. The company sells stock to buy the Bitcoin. So why wouldn't you short the stock and buy the Bitcoin? Because that, in theory, is a convergence trade, and it has converged. So gravity for MNAV was towards 1. The other insight I came up with is I do not believe that the Bitcoin treasury is the product. Having Bitcoin on your balance sheet is great, but that's not the product. Product is, how do you acquire the Bitcoin? In Strategy's case, they sell bonds. They're a bond salesman. They literally sell bonds packaged up as preferred stocks, but they're high yield bond salesmen. That's what they do. Is there demand for high yield bonds? Yes, there is. If you go to Mr. Treasury Company number 45, their product is their equity. Well, what happens if your equity is no longer trading at a premium and it doesn't go up? Because at the end of the day, there is only one success metric. From an investor's standpoint, you can say Bitcoin per share and accretive dilution and MNAV compression and expansion. You can say all the buzzwords you want. If your stock price goes down, no one cares. Until your stock price goes up, no one cares. So the reality is, for all these smaller companies, they don't really have access to good terms and deals in the debt market. They're not big enough to issue preferred stocks. They don't have enough. If you've got 5,000 Bitcoin, and there's a lot of companies with about 5,000, and Bitcoin goes to $1 million, you got $5 billion. What are you going to do? Change the bond market with $5 billion? You're irrelevant.
You need an insane amount of scale, not just to be able to issue preferreds to get the shelf approval for that, but then to even have a sizable ATM. You need to already have a considerable amount of scale.
Difference between 640,000 Bitcoin and 5,000 Bitcoin is approximately 640,000 Bitcoin. You know what I mean? The gap between these are just, it's enormous. And whenever you run the numbers on, and here's the other thing, there's a lot of these treasury companies that they didn't actually buy Bitcoin. This is the other thing. It's a full-time job to actually get in there and work at what's your real share count, how much of it is diluted, how much of it is tied up in converts. Did you actually buy the Bitcoin? There's some companies that do these really questionable Bitcoin bonds where they take the Bitcoin from a whale. Suddenly they've got 3,000 Bitcoin or 1,000 Bitcoin. And the whale actually has a term where they can actually, if the stock doesn't go to a premium, they can actually just take the Bitcoin back. So it's risk-free for the whale, But if the stock goes up 2x and they get an MNAV expansion, the whale then gets the stock, the company keeps the Bitcoin. What's the whale going to do? Sell the stock and
All the
rebuy
stock.
double their Bitcoin. Totally.
Yeah.
They don't care. There's all these pipe deals where insiders just get minted immediately. Like there's just so many things. I'm like, guys, looks like crypto. Looks just like the crypto fugazi that we've been doing for years. Really kind of sad to see, honestly. So my base case at the long tail, the forest fire is going to have to come through. A lot of these companies, they're just going to get wiped. They have to get wiped out. I agree. That's probably in terms of like narratives getting ground to dust. I think we need to see some flush outs of these companies because it's just silly. Like there will be some winners, but the Pareto distribution will be a strong one. And the problem for me, like I'm an Australian, I don't need a treasury company here. Like there's nothing advantageous about it. People say trapped capital. I'm like, guys, look. First things first, let's take Australia as an example. Trapped capital in Australia. Okay, so you're talking about trapped capital that can't buy Bitcoin. We have a Bitcoin ETF. They can't buy the US Bitcoin ETFs. They can't buy strategy. How trapped is it? Like, because I would say that trapped capital probably is very happy with a 60-40 portfolio because they're not like, if you're advanced enough to know you want Bitcoin exposure and you're willing to go and buy a treasury company, you're not buying a penny stock with a cold card. You know what I mean? Like the gap between what is this trapped capital actually going to buy? They're not going to buy a $5 million business that has 10 coins on their balance sheet. Like it's just not happening. So I think
If
the
they do, I
expectation
think they're
mismatch.
going to buy strategy, right? Sorry to cut
Yeah,
you off, but
exactly.
they've already achieved scale. They have what, 4 at this point, different tenors along the yield curve for their fixed
Totally.
income products. Like they've already got that covered. And so agree with you. Sorry for cutting you off, but the value
No, that's all
proposition,
right. No,
anything else.
strategy is the leakage. That's the problem.
Yeah. No. Yeah. No, it becomes a tough value proposition when your entire business model is essentially saying, I'm going to do what strategy started doing 5 years ago. I'm going to start with being an ATM machine and selling my stock. And then 5 years from now, I'm going to sell preferred equity.
And then when
Oh, by
that
the
tool
way,
stops working, they're like, oh no, I'm out of tools. It's like, yeah, you are out of tools. That's the problem.
right. Absolutely. I mean, I think that there are certainly opportunities for transforming Bitcoin into a fixed income instrument. I'm keeping an eye on my friend Pierre Rochard, the Bitcoin bond company. What else do you have your eye on out there? We've kind of had a really wide ranging discussion. Anything else in Bitcoin that you have your eye on?
No, I mean, like, I'm really just, I'm excited to see where this current trading range resolves because, I spend all day looking at Bitcoin data, all day thinking about it, building charts, looking at different ideas, trying to just like understand market structure. And I can tell you right now, it is really, really hard to read where this thing is going to go. So when I get to those points, I'm like, well, let's just think through both scenarios. Let's construct a case for what it would take to move higher. Let's construct a case for what it means to move lower, because that is going to be painful if it happens. And really, like, I like to just think through my game plan ahead of time. So if I wake up tomorrow and the price is at 80K, I'm not going to be surprised because to me, that means we lost 95. It means a whole bunch of people suddenly went underwater. Sentiment cracked. We lost that 100K level. We hit those liquidation points. Suddenly, all of those call buyers, they're happy for the covered calls, but the rest of the buyers just get wiped out. However, if we get down to 80K, suddenly we enter the zone where it's like, this is kind of where I think a bear market starts forming. So I'm like, yes, I will step in front of that train. So just like having those game plans ahead of time, really, I think the thing that I'm most intrigued about, these options are now massive for IBIT. The volatility profile is going to change a lot moving forward, right? It's already changed this cycle, but I think it's going to change even more. And something that I just can't help shake the idea of, Bitcoin's a 24/7 global market. Options are not. So what happens if Bitcoin has a Sunday, like historically this cycle, Sundays have been horrible because Trump tweets something and we're down. What happens if something happens and Bitcoin's up 20K in a candle, right? Up 25K in a candle. And suddenly all those options traders are watching it on a Sunday being like, oh my God, I can't do anything. And they know they're going to wake up on Monday morning and let's say a big negative red 45%. They're like, holy shit, I can't do that again. So I'm waiting for that like event where the mismatch between ETF and derivatives trading hours and Bitcoin trading hours just suddenly punches people in the wrong direction. So that's the thing I'm kind of excited for because there's going to be fireworks and it will happen at some point. We will see this at some point in time, and a lot of traders will lose their shirt and learn their lesson.
Couldn't agree more. I tend to think that I believe that's going to happen, but it may drive the stock market or even more equities, or maybe even just the Bitcoin ETFs and the ETFs options market for Bitcoin to be open 24/7, 365. I think because Wall Street loves money. And I think in order to resolve that mismatch, rather than closing the options market entirely, it's not an option, right? They farm fees from that thing. They would open it up 24/7, 365, much to the chagrin of the people who would have to work on desk.
I was going to say, I was actually talking about this morning. I don't know if this is like, I think you're right. This is where it's going to go.
Yeah.
I don't think it's a good thing though, because what's going to end up happening is you're going to have the whole world switched on 24/7. And I think it's just going to wear everybody out.
Yeah. Yeah. That's one way to make these people on Wall Street who are already so stressed out even more stressed
Oh
out
my
and then
God.
quit their jobs. That's how you get automation faster on Wall Street. You wear them out and then you have justification to replace them with robots at some point. James, this was a fantastic interview, man. I think we covered basically everything. We talked about the bull and bear case, where Bitcoin is at, why it's behaved the way that it has, looking forward. We touched on the macro. We touched on the gold trade. We touched on treasury companies. Thank you so much for your time, man. Any parting thoughts for the audience before we go?
No, mate, I think, thanks for having me on. And honestly, if you can get your head around like some real unlocks I've had in markets, allow yourself to know that you can't predict the future and no one can. So accept the uncertainty, hold two views at the same time, competing ideas, right? Bullish selling. It's this idea that like there's a lot of selling, kind of bearish, but also it's absorbing it, kind of bullish. Hold those ideas, and ultimately price is the answer. That's kind of, they're the questions, and then price is the answer. And also you can't control where the market goes. It's like the tide. It's going to drag you out to sea if you swim against it. Once you unlock that the only thing you can control are your decisions, pre-make your decisions. If Bitcoin goes to 80K, what are you going to do? If it goes to 150K, what are you going to do? That's the only thing you can control, right? And between now and then, you've got a whole series of decisions. If you can master those ideas, it just becomes a state of Zen, and it becomes a puzzle that you're watching, right? Rather than something that you're tethered into because you want the price to do something. The price will never do what you want to do on your timeline. It'll do it on its timeline. You're just along for the ride.
Fantastic. James, thank you so much. Everyone listening, think probabilistically. Don't get caught when the tide moves against you, and ultimately have a game plan, regardless of whatever happens. James, thank you so much. If people want to find more of your work, I'm sure everybody listening already follows you. But if not, where can they find you?
Yes, you'll find me over at checkonchain.com. So we've got a charting website, which is all the charts are free. We've got strategy, treasury companies, ETFs, derivatives, the whole lot. If you want a Bitcoin chart, we've probably got it. And you'll find our newsletter at checkonchain.com as well. We do 2 posts a week, written and video, just to help people think through this stuff and never be surprised.
Fantastic. James, thanks again for coming on. Appreciate it.
Thanks, mate.